I am a millionaire. It's a weird thing to hear, right? I tell you, it's a weird thing to say. I am a fucking millionaire. I guess how old I am. 27. You know what that makes me here? A fucking senior citizen. This firm is entirely comprised of people your age, not mine. Lucky for me, I happen to be very fucking good at my job, or I'd be out of one. You guys are the new blood. You're gonna go home with the Kesef. You are the future big swinging dicks of this firm. Now, y'all look money hungry, and that's good. Anybody tells you money's the root of all evil doesn't fucking have any. They say money can't buy happiness. Look at the fucking smile on my face. Ear to ear, baby. You want details? Fine. I drive a Ferrari, 355 Cabriolet. What's up? I have a ridiculous house in the South Fork. I have every toy you can possibly imagine. And best of all, kids, I am liquid.
Hi, welcome to this video today, which is all about how to avoid broker scams and how to choose the best regulated brokers. And even when choosing a regulated broker, you've got to be very careful because they're not all equal. I've started the video with a short clip from the classic film Boiler Room, which was about a rather unreputable brokerage. If you haven't seen it, go and watch it. And it is, in fact, extremely realistic of brokers outside of regulation, the high-pressure ones. The one thing I would say about the film is it's realistic, but also it's that culture of greed that exists within brokers. Brokers, basically are there to make as much money as possible out of you as they can. And I'll show you the subtle ways they do that in a moment. But the easiest way to avoid scams is, first of all, do not trade with any unregulated broker. You'll often find them on tropical islands or somewhere deep in Eastern Europe where there's no regulation. And you should basically avoid them. Unless they've got a regulatory body which is specific to finance, do not trade with them. Now, even when you come to regulated brokers, all regulation is not equal. You'll find some great regulation around, like the UK, the US, Australia, places like that. But let's take the EU for example. You'll find very good regulation in Germany. Then of course you've got Cyprus. Now Cyprus has got, in my view, very lax regulation. I've seen some of the promotional stuff that comes out of brokers there, which would never be allowed in, say the UK or the US, just appealing to greed. So be careful, of the broker that you actually choose, where they're situated. Make sure you check the regulation and what you're entitled to in terms of protection. Now, a lot of traders actually are very weary of trading with a market maker and want to trade with an offset broker. My own view is it doesn't matter if it's a market maker or an offset broker. And, a lot of people will say, well, market maker makes money when you lose, which is true. And they make a lot of money out of it. They'll take about 95% of the money they put on their book. But they've got such a healthy profit margin, far more healthy than an offset broker. They don't need to cheat anyone. The statistics are the statistics. They don't help traders lose money. Traders just do that on their own. We all know 95% of traders lose. So market maker can often offer a fantastic service and really keen spreads because he's got such a high profit margin. It's up to traders to beat the odds. Now, if you go to brokers who offset their trades, there's variation between them. And what I would say is, just go for the biggest ones. You want really big brokers. Don't go so much for the smaller ones. Smaller ones tend to have sort of tricks to get you to trade more. And this will be in the form of things like research, broker tips, trading signals from the broker. Don't trust any of them. Don't take any advice from any broker whatsoever. If brokers made money, they wouldn't be brokers. And, I think traders, they look up to brokers if they can make money. They can. They make money from you and me if they can. But they can never make money trading. That's why they're brokers. So just always keep that in mind. And what you want is a broker who's just basically going to execute your orders, who's financially stable, and who doesn't give you any advice whatsoever. Does it matter if it's 2 pips or 4 pips? I don't really think so. As long as you're below 5 pips on the majors, that's okay. A lot of brokers will actually tell you that it matters because of day trading and scalping. This is another subtle trick brokers use to get traders to lose money. They want you to day trade and scalp. It's a losing strategy. None of the top traders in the world day trade or scalp. You're trading random volatility. The broker wants you to do it so he can make commission out of you. So basically don't fall for trading often and letting your emotions get involved. Trade longer term and you'll make money. In terms of leverage, you can get up to 500 to 1 at many brokers. This is just another subtle way of getting naive traders to lose their money. You should never be using more than 10 to 1 in terms of leverage. So that should not be a consideration when choosing a broker. My own view is get decent spreads, check out the regulation, test drive it through a demo account just to see that you're happy with the platform, look for 24-hour support, and as a general rule, look for brokers who've been in business a few years and who are extremely financially stable. So go and look at the balance sheet. And brokers can offer you a great service. However, don't take some of the services that they offer which can cause you to lose, so to speak. And always stick with the big regulated brokers. Thank you very much for watching this video. Take care and have a good day.